Hey everybody, welcome. TRADEway's Market Monday. My name is Blair Nightingale. I said last week, same time, same channel, we'd be meeting right here. I know you guys have been joining us on the live broadcast as well. Many of you have been joining us for the recordings on our Facebook page. If you're a first timer with us, all you got to do, like that Facebook page, and anytime we're going to do an event like this, you'll be reminded. So if you want to stay plugged into this awesome content, go ahead, like that Facebook page if you've not already. That is number one. Number two, I love to hear from you guys. I never want to be somebody who just comes on here and talks at the screen. Really what I want to do is speak to you guys, but also hear from you guys. So if you want to drop a comment, say hello, tell me where you're from, ask a question, anything at all, go ahead, throw it right in the comments, even if you're watching this on the recording later. I would love to hear from you. I definitely check those comments. We do have a team at TRADEway that checks those comments, so we want to hear from you. We want to have discussion with you guys because some of the things we're going to talk about today, you may have questions, you may have concerns, you may have some things that you want to get clarified, so that is an awesome way to do that. So please don't hesitate, don't be shy, go ahead, throw a comment in the box there. This is our Market Monday broadcast, so we specifically focus on what is going on in the markets. Now we have some different approaches. Today, specifically our topic is managing your money in a bear market crash. Now, we just went through a bear market crash, and if you've been following along with the Market Monday series, then you've seen I had a specific broadcast where I talked about basically that we can do better. Terrence, I see you there. Hey, Terrence, glad to have you on here. Awesome to see you. We can do better. We can do better. We're going to talk a little bit more about what I mean, but if you're an individual or a family, a household out there, and you've had your money in this market, or you have an experience in the past where you had a financial advisor who caused your money to go all the way down in that bear market crash. Now, maybe that happened in this recent one, and I mentioned in that previous broadcast that being involved with TRADEway as a student and as an instructor now for 5 years, I've met many students, okay, around the country personally in the meetings that we conduct as we teach classes here at TRADEway, asking how many of you in this room lost 20, 30, 40 or more % in the dot-com bubble crash, right? Or the Great Recession, the crash of 2008. And now, obviously, as I mentioned, this year, because of Corona, because of some stuff with oil, just the things that have been going on in 2020, we had a bear market crash. For those of you who don't know what a bear market is, whenever we move 20%, a major index moves 20% down from a high, then that is what Wall Street officially calls a bear market. We're no longer in the bull market where the bulls or the buyers are in control. We're in a bear market where the sellers are in control. And when we are buying stocks, we want the buyers to be in control if we're in a stock because we want it to go up. And buyers are what makes stocks go up. Sellers cause them to go down. Okay, so we had a bear market crash, and I'm going back to my original question now. How many of you experienced losses? I've personally spoken to many, and I was very passionate in that broadcast, as I am today, that we have a plan, which is what we're going to talk about. We have a plan for when these things happen, okay? Because I don't want you to be that story. I don't want you to be the person who had significant losses. What if I put a comment about this in a post that I did online some weeks ago, and I got some interesting questions. I said, what if you're old enough now, meaning you're close enough to retirement age, where if we have a crash and it doesn't recover the way it has this time, which I'm going to talk about as well, if you're interested, hey, what's been going on in this market? Seems like it's been doing really well. I'm going to come back. I'm going to show you the chart. We're going to talk about that in this broadcast. But if you're close to retirement and it crashes, I've already spoken to people who were planning to retire and now they cannot do it. Okay, at least not in the way that they were going to. And they had somebody managing their money. And I want to say this. I don't have a problem with financial advisors. I am a financial advisor. I am a licensed advisor. I understand that there is different approaches for managing money, okay, in this industry. That is what it is. Let's just be real. This is an industry, and if you've got somebody managing your money, then they have been taught different ways to manage your money. And we're going to talk about that too. Lots of stuff that we're going to dive into here, but I want to set the stage. I don't have a problem with financial advisors. There's some great advisors out there. Some of you may be watching today. So I don't have an issue with that, but I will get explicit. I will talk about what I do have an issue with. And I think you folks out there who've got some money invested, okay, whether it's a lot or it's a little, I think these things are going to benefit you to save money in a bear market crash, to look at some ways you can even potentially make money in a bear market crash. Now, we have a coach around TRADEway who likes to say cash is a position, meaning you don't have your money in the market. That is a position. Cash is not a waste when cash is the best place to be. And sometimes cash is the best place to be. But there's a doctrine very prevalent amongst advisors that does not recognize cash as a position. It's not viable, and there are several reasons why I think that is true. We do not believe that at TRADEway, and let me go ahead and dive into that right now, okay? Because I want to help you guys understand how to feel confident in a crash and save money in a crash. I'm going to pull up a chart here in a minute, like I said I was going to do, but the goal today is to eliminate two things for you and me. We are going to eliminate ignorance. Ignorance, that's not an accusation. That's not a negative against us. It's just that, I don't know everything. I don't know everything. If you're plugged into this TRADEway channel, it's because you desire more knowledge, more wisdom when it comes to your money, which is very smart. The scripture says in all you're getting, get understanding. It says seek wisdom. Above all else, seek wisdom. So this is a good thing because it gets rid of the ignorance we have. Because what we don't know can hurt us. We say what we don't know can't hurt us. Of course, that's not true. What we don't know can hurt us. And when we entrust somebody else that we're paying to take care of something for us, even if their interests are good, they may do some things differently than we would like them to be done. But if we don't have education, but instead we have ignorance, we don't feel powerful, we don't know how to engage in that relationship with our advisor in a meaningful way, and help steer it towards the kinds of management and results that we would like to see, okay? And I'm going to show you some of that today. I keep saying that. I am going to show you that today because what you don't know can limit you. I want to get rid of that powerlessness. When something's crashing, I don't want anybody out there after this broadcast. Here's what I can. I can't make guarantees about stocks to you, but I want to guarantee this. You don't have to feel powerless when you're watching your account fall. You don't have to feel powerless. And one thing we can do at TRADEway that I intend to do and lay a foundation for in this broadcast is to help you feel like you don't have to be powerless. So if some of you out there identify with that feeling as we had these last few months of major volatility in the markets, then this is for you. I definitely want to say this. So I've mentioned a couple times. Let's dive in. Number one, I want to say there is a way for you to work with your advisor to have a plan. Now, I did a whole session on this previously in this series, okay? So I'm not going to dive quite as deep on that. There's a few more things I want to say, but I will recap and remind in this broadcast, you can work with your advisor to get a plan. Now, some advisors are more willing to allow this, some are not. You may want to assess if some of the things in this broadcast today click with your mind, with your heart. You'd like to make some changes or have a discussion, and you find that your advisor's not really willing to have that discussion, not really willing to be open to that. I can tell you there are many TRADEway students who've taken TRADEway courses. They ask questions of their advisor, and that's not a comfortable position for their advisor to be in, and they've decided maybe that advisor's just not the best person for them because they want somebody who's willing to work with them, okay, not just for them. And ultimately, that's what I said in the broadcast. Your advisor works for you, not the other way around. You get the final say, okay? I think that's important for some people to hear. So let's take a look at this for a second here. Let me go ahead, share my screen. Okay, pull that up there. And we'll jump over to the chart here. Now, what I'm looking at here is the S&P 500. For those of you who don't know, this is an index, 500 major growth companies. They put 500 companies in an index in different sectors of the economy, and this gives us a good measurement, an overview of how stocks are doing in those different sectors. So that is what we call the S&P 500. And at TRADEway, this is the main index we watch. There are several others, but we watch this one mainly, as I said. So I'm looking at this S&P 500. Now, obviously, you'll notice two things are going on here. We're going way down. Fastest bear market crash in history, okay? This was a huge, massive drop. Now, on the other hand, major recovery. Okay, now I mentioned earlier I'm going to talk about the recovery, but I want to focus over here because, of course, we didn't know what was going to happen. You never do. Okay, I want to say this at TRADEway, we're not crystal ball stock gurus in terms of making promises we can't keep, looking at charts in hindsight 2020 and just making wild assumptions because we have the benefit of looking at a chart in the history. No, we teach you how to invest your money wisely, according to the Word of God, with a skill set that protects your money and makes your money available to growth. That's what we do, okay? It's not magic. It's a skill set, and it's a real skill set. So we didn't know what was going to happen next. We just know this crash happened like this. And in 2000 and 2008, it was the same thing. It crashed, and we didn't know what was going to happen. Now, here's my thing I want to say, right? Oops, sorry. We were talking about having an advisor. Now, I mentioned this in my previous broadcast, as I said, but I want to recap it. Most of what I hear from financial advisors is when you have a bear market crash, Blair, your money just needs to stay in the market all the way down. Now at TRADEway, we don't believe that. And again, passionate about this because many people have shared, I've lost a ton of money. What if you're 55 years old? You don't have time for that to come back. Now, hopefully that advisor doesn't have your stock exposure as high, but no matter where you're at, that's a lot of money. Even if you're young, I don't want to give up 40%, 30%, 20% if I don't have to. And I don't believe that you have to, and I want to show you. Instead of letting it ride all the way to the bottom, I want to say this. You could go to your advisor and say, Mr. Advisor, what is your plan for my money in a bear market crash? That question alone would take that relationship further than almost every description I have heard from TRADEway students of their relationship with a financial advisor. Did you even get an email? Did you even get a phone call that had a plan? Not just an email that said during COVID-19 we're committed to our customers. That's a nice gesture, but at the end of the day, what are you telling me you're actually planning to do to limit my losses? Because the doctrine, as I mentioned earlier, that is far and wide, not universal, but far and wide, is you let it go all the way to the bottom and you ride it out. Why? Because eventually it will come back. Problem with that is that you take substantial losses that you don't know if they'll ever come back. Because some of those companies, some of those stocks, some of those things may never come back, number one. You give up tons of gains, number two. Number three, you don't have those gains to reinvest as the market does begin to come back, number three. And number four, you lose all that time. Depending on where you are in your journey to retirement or whatever financial goal you have, you lose that time. And if it's not necessary, then you would never do it. But it's often said that it is necessary. It's the only way to do it. And I'm telling you today, it's not. So a conversation to say, what is your plan, is a very healthy thing to do. I'm looking at this chart. We like to use what's called major moving averages. Now, I'm not going to teach on moving averages today, but we could even use a conservative moving average, okay? Conservative, meaning we would not get out of the market early. We would get out pretty late. We would look for several indicators on the chart. Okay, again, not smoke. This is not magic. This is not prediction. This is just saying in an investment, it's an okay thing to capture profits and define the max losses you're willing to take. It's not wise in investing to never take any profits, never lock in profits, and never limit losses. So I wonder today, why is that such a controversial topic when it comes to your money? So if having a discussion with your advisor about what to do in a bear market crash, because the one we just had isn't the last one we're ever going to have. It's a normal cycle for an economy to go through contraction and expansion, contraction and expansion. And this was a contraction, and it always has major catalysts. There's always something that is catalytic. This isn't just one-off news event. Now, it was unprecedented. We know that, right? But the last two bear market crashes in their own way, they had unprecedented events as well. So what I'm saying is this is going to happen again in some way, in some measure. Bear markets happen. So we want to have a plan for that. And I would say, what's the plan for capturing profits? What's the plan for limiting losses? That's not a bad thing to ask. And like I'm saying on this chart, by conservative standards, we could have been out of this market sooner than all the way down here. I mean, like I said, bear market 20% from the high, even at 30%. You know, I mean, the market lost 40% in 2008. So we could set up some standards that give us an exit and an entry, which I'm going to talk about in a minute, that would have limited those losses. We didn't need to time the market perfectly. And that's often an argument I hear. Blair, you can't time the market perfectly. I'm not even talking about timing it perfectly. I'm saying this drop was massive. And take that much of a loss in my long-term money is not something I'm willing to do. And it's not something that you would have to be willing to do either, okay? So that's really important. That's really important. Now, just to recap, it's reasonable to expect to limit some losses in a bear market crash. So that's a conversation that you could have, okay? So we are actually out of that crash in a sense, right? We're not in a bear market anymore. I'm going to go back to that chart. We saw the other side of it, V-shaped recovery. So some might say today, Blair, look at that V-shaped recovery. That's what we would call that, right? We didn't go up and then come all the way back down again and create what's called a double bottom or a W. We went up, we were up, we crashed, came up a little bit, crashed, then moved up. That's a W. Right now we've got the V. It's all the way down and it's just about all the way back up now. So then I can hear the argument, well, Blair, I think you're wrong. TRADEway's wrong, because if we had just stayed in, look at that recovery. We'd be in for that, and we didn't miss the bottom of that recovery. So it would have been better just to stay put. Well, to that, I would say a few things. Number one, you know, this is why I actually still think that would be wrong. Okay, and again, that's not an attack, but that's not how we would approach it. Okay, we actually, again, a conservative line, just even using a moving average that we watch on any chart when we teach our system, we could have been out of that crash sooner than the bottom. We didn't need to call the bottom. That wasn't necessary. We could have limited losses, which meant we kept equity in the account more than would have been lost. And I would have been able to reinvest that when the recovery happened. I would not have risked that money. And I would say number two, maybe as or more importantly, this is the first V-shaped recovery for a bear market in history in the US stock market. We've not had it like this. We've always retested afterwards. So the idea that it's just going to come right back the way it did, well, that's not something we'd ever seen before. So nobody out there could have banked on that or predicted that that was going to happen. It at best would have still been just predictions and speculation anyway. But even though it did happen, we didn't have that precedent before. And I still say, and I'm just repeating, your money, you could have saved some of that money on the left side of that chart and reinvested that on the right side of the chart and had even more money, not just a loss that you were trying to recover from. Okay, so that would be even better. So having a plan in this case would have been good. Now I want to show you this. Let's go back to our chart here. I'm going to show you this. Now you'll notice on this chart I have here, this square right here. Because here's the argument. You can't time the market. You never would have known how to get back in. Blair, you just be spouting out online, in hindsight, the benefit of hindsight, where you would get into this chart. If people had gotten out, where would they get back in? They would have missed all of this, et cetera, et cetera, et cetera. Well, if you're familiar with the TRADEway material, for some of you out there who maybe are students, for those of you who aren't, this square right here even, now I admit I've got these lines on here for more recent activity. So this isn't necessarily, those lines are not necessary to the point I'm about to make. This square, on the other hand, highlights what I'm talking about. We've had a system that teaches when to enter into a particular stock, okay? It doesn't mean we use it all the time, and it doesn't mean every single student uses it every time, okay? And if we were to teach that concept today, which we're not, we just don't have time to go into the whole thing right now, but this is an established, published part of the TRADEway program and has been for years. Okay, so this isn't just hindsight on a chart. And here's what I want to tell you. I want to tell you this because I want you to have some confidence and some hope. Blair's saying, I don't need to ride the market all the way down. And some of you out there, you were nervous. You saw this thing crashing, but it's been coming back. So you're thankful, you're happy. And I am happy for you too, trust me. I don't want people losing a bunch of money. That's why we do what we do. So I'm glad a V-shaped recovery, even for our economy, there's certain aspects of it that I think are looking better than people thought they were going to. And that is a good thing. We are happy about that. I'm happy about that. And if your money is recovering well, I'm happy about that for you, 100%. But I am saying that if you had exited there, that rebuttal, that point that's sometimes made that says, well, you would have missed when to get back in. You'd have missed a bunch of the recovery. Well, I have no crystal ball, like I've mentioned several times. I'm not suggesting that I'm going to call this bottom. Look at this right here where I'm circling. Oh, I would have got in right there and right then. No, of course not. There's nothing there, according to the TRADEway system, that tells me go ahead and enter into this. But this one right here, absolutely. Absolutely. We have a specific trigger that we teach to our students, and that would have been when to get into that, back into the market, according to that trigger. Now, there's some other factors for long-term money that we'd look at, okay? But I'm saying it is very reasonable, not based on my hindsight on this chart, but based on a trigger that's in our program. This candlestick here would have been very, very interesting. And of course, it has just continued to recover from there. We wouldn't have known this was all going to happen on that day. But we don't trade based on what we know. That's not what trading is. I'm going to say this is a little rabbit trail, but I say this to my students all the time. Trading and investing is not about knowing what's going to happen. It's about having a system that identifies opportunities that give us greater probabilities of what is going to happen. So whether you're, for some of you out there who are a little more into, you've been in this world a little longer, whether it's technical analysis or it's fundamental analysis, either one of those approaches, which TRADEway uses both, either one of those is going to give you opportunities that you find that give you a greater edge. You still don't know what's going to happen. I never know what's going to happen. The job of the investor and the trader is not to know exactly what's going to happen. So when I mention this candlestick, it's not a crystal ball. It tells me that something is happening on that chart that I want to see happen, that gives me confidence for the future. And it absolutely, because things continue to be positive, would have been great. And we would teach you what to do even if it didn't continue to be great. And that's what we do at TRADEway. Okay, so just to recap really quick, okay, we don't have to ride it all the way down. We want to have a conversation with an advisor if we have one, and we want to say, hey, what is your plan for locking in profits and limiting losses? That should not be a controversial conversation. If your guy or girl starts sweating bullets just because you're asking that, then that's an unfamiliar territory for them, it seems like, and I don't know if that's going to be necessarily the best situation. So that'll be a great conversation to have. And by the way, just so you know, Blair Nightingale, TRADEway, Market Mondays is not suggesting everybody go out and have a problem with their financial advisor. Absolutely not. What I'm saying today is, hey, there's some great people out there. And by the way, TRADEway has its own long-term program. Okay, so if you're interested in somebody who can take care of your money and answer those questions, that is what I'm saying needs some more attention. That is what I'm saying today. So just to make that very, very clear, for those of you who don't know, the TRADEway, the long-term program we have, is called AMPed. AMPed. You can go to our website. You can find out more. You can leave a question in the comments if you'd like to know more. I'd be happy to get you more information. But that's not the primary focus today. But I think it's a great benefit to a lot of people. So I do want to bring that up. So having that plan, asking those questions, understanding we did have a V-shaped recovery, but you could have more in your account, right? Potentially, if we got out, didn't take all those losses. Oh, look, it is a V-shaped recovery. We didn't know that was going to happen. But in our system, we specifically have a way to show us, hey, this is a good time. This is a better time to enter back into something. If we even applied that to the market, we could have reasonably, in hindsight, got in at a good spot, and we could have continued to do well in that scenario because we would have had even more money to reinvest, and we're not just trying to get out of the hole. Now we're actually moving forward and capturing some more of that awesome V-shaped recovery, which I know has been a really positive thing for a lot of people out there to see the markets really moving like that. So if that's been you, if you've been in that and you've been a part of that movement, then I'm happy for you because it sure has been some really what we call very bullish activity, really strong. So that's really great. Okay, that's number one. We're limiting losses. We're capturing profits. We're having that conversation. We're looking at what could we have done in this recovery, which, by the way, is not necessary. It's not over. We don't know where we're going from here. But the S&P, as you notice on that chart, it's getting within shooting distance of those all-time highs, which is insane. It's remarkable to see we've recovered just that far. I think this market now has been up 7 days in a row. So it's very strong. We would expect some pullback here in the next week, just because when things get that extended, that hot, that high, there's some profit taking, and that pulls the market down. So don't be surprised to see a little bit of that in the next week or two for sure. You never know, though. This thing's been really hot. It can just keep going. Something else I want to say about managing your money in a bull market, or a bear market. Remember, I said this isn't going to be the last one. Okay, who knows? Maybe in the fall, some people talk about a resurgence of Corona. Now, I don't want to put fear out there. Okay, that's not my heart at all. And in fact, if you know me, the last thing I've been in Corona is fearful. I've been respectful. I've tried to be sober, but not fear. And it's never my heart to multiply fear. What I want to do is multiply peace, faith, and courage in the midst of any circumstance. That's what I want to do. Hopefully, if you've been joining us on the Wisdom Wednesdays, that side of who I am and who we are here at TRADEway has been coming through as well. If you haven't, I welcome you to come this channel, same time on a Wednesday. You can join us for the Wisdom Wednesdays, and we're going to look at the spiritual side of who we are as we pursue breakthrough together. But to get back to this, the Market Mondays, one of the things I want you to understand is we may see some more downward movement, whether it's in the fall due to a resurgence of COVID or it's something else, or maybe it's in years to come. But we are going to have to navigate these things again. So the first half of what I've said is important, but also think about this. we can actually utilize some tools to make money while the stock is falling. Not just save it, like I mentioned earlier, but we can potentially make money if we have the right skill sets when the stock is falling. Okay, now a lot of folks don't know that that's possible. Okay, so I want to tell you today, it is possible. We have TRADEway students who've learned those skill sets and they use them on a regular basis. That's something that we want to share with you, and for those who are interested, teach you how to do. But let me just tell you, like, there are two really main ways that people do this, and people on Wall Street do this all the time. Now, I'm going to tell you what this strategy is, what this skill set is, okay? Let me go back to the chart. Now, we're talking about in here, okay? We're talking about in here. So at TRADEway, we're going to teach you how to take opportunities and when to take those opportunities. I mentioned a little bit of that already. But when this is going down, we don't just have to sit on the sidelines. In fact, thousands of TRADEway students were waiting for an opportunity like this. Not that they were happy about the news. Remember, I said already, I don't want to see fear, and I'm glad to see this recovery. But they have a skill set. Remember, I said ignorance, right? It's not that there's anything to blame, but what we don't know is what we don't know. It's good to know more. The power of the put option. Okay, this is option. Some of you out there don't know what an option is yet. And we don't need to know what an option is yet. But I'm just going to say, with something we teach our students to use, put options, we can actually use those to make potential profits when the market is moving down. Now, if you've ever heard of shorting stocks, I'm not going to go through all of what shorting stocks is. A quick look at something on, say, Investopedia will teach you what shorting stocks is. But the important thing to know is it has unlimited risk. Unlimited risk. And most folks are not even allowed to do it because their accounts are not big enough to do. Why? Because it has so much risk. Well, put options, okay, put options is something that you and I, without massive amounts of risk, massive trading accounts, can actually learn to use. And that's a helpful and useful tool during bear market crashes. Perhaps, let's just say theoretically, my money, my long-term money, is sitting on the sidelines, or it's in a cash equivalent or close to cash equivalent, meaning it's not taking on a lot of risk. It's not going to make a lot of gains, if any, but it's not riding the market all the way down like we already talked about. But I could have some potential earning opportunities using put options. So for some of you out there, that's a whole new concept. That's a light bulb. Not only could I can protect my money, right, to a higher degree, but I could even maybe make some money. Okay, there's a potential there for me to do that if I learn to use put options, and I don't need to take on that massive risk of shorting stocks. So what you know can help you. Let's state that in the positive. What you know can help you. In that chart, that's a big drop, as we've looked at several times, guys. So, Dave, I see you there. Welcome, Dave. Welcome to everybody who's commenting on there. So happy to see you guys. That's a put option, okay? You use the downward movement for potential. Instead of just, let's go back to the ground level. What we started on this broadcast was, instead of just watching it go all the way down and evaporate before your eyes, there's got to be a better option than that, and I'm telling you, there is. So in closing, we just literally can't afford to be only at the mercy of others managing our money when we don't know what is happening. We don't know what to say. We don't know what to ask. We don't know what to do. And it contributes to a sense of powerlessness. And now some of us are breathing a sigh of relief because the market is recovered. And in many cases, hopefully for you, that's the case. It looks close to or at, maybe even in some cases better if there was some shifting going on than it did before. If that's the case, again, I mentioned earlier, I'm very happy about that. That is what I want to see. But that sigh of relief, doesn't necessarily mean we're prepared for it next time. So that's what this broadcast is meant to just seed the clouds, if you will, of some things that we need to look at, we need to think about, so that as we move forward in the future, we can begin to put the pieces in place to feel confident about what's to come in the future. Because we never do know whether it's the fall or years from now. And of course, today we're talking specifically about what to do in a bear market. Obviously, in a bull market, that's where TRADEway focuses most of their time. But having just come through a bear market, hearing from many of you guys, we want to make sure that there's a sense of confidence that you have what you need to feel good about what your money's doing as we go forward from here. So if we escaped this one without a lot of losses, this is an excellent wake-up call, reminder to say, oh man, I want to know how to navigate this better next time, because I'm not going to bank on it going exactly the same way. That's never what we want to do in trading. Because like I said, this is the first time it's ever recovered like this in history. So that's a good thing. If better is possible, is good enough? That's a question I'm going to leave you with. If better is possible, is good enough? So TRADEway, for you guys out there who've been watching these broadcasts and you say, you know what, Blair, I'm at a spot where I want to learn more. I want to learn more. I want to get into a program. I don't know what it looks like yet, but I want to get into something. I want to learn more from you guys. Listen, we've got a great course. Okay, we're going to do a 30-day challenge. This is TRADEway's 30-day challenge. It's called our Trade in 30 Days Challenge. Okay, I mentioned some specifics today, right? That candlestick in that little box. How we'd reasonably get out, reasonably get into a market, how we might look at trading put options, but you don't even know what an option is yet. Things like this, specifics that will empower your financial future, are things we're going to take 30 days, you and me and the other TRADEway coaches. We're going to bring you into a private Facebook group. We're going to send you course material every day, and we're going to take you from the place of zero to trade. You're literally going to know the TRADEway system for trading stocks. You're going to have the material you need to use the TRADEway system. You're going to have the tools you need to set it up on your computer. By the end of the challenge, it will be set up on your computer. Does that sound good to you or not? For those of you who are interested in learning, the Trade in 30 Days Challenge is going to be a breakthrough for you. It is going to take you out of a place where you don't feel powerful, and it's going to teach you more in 30 days than you thought you were going to learn. We're going to have individual courses for you, quizzes, workbooks, access to coaches and other students that are in the class. You're going to get access to all of this and more in the 30-day challenge. It is a very low price. There's a link for you. You can click that, and you'll be able to join the 30-day challenge. You can also just search the TRADEway Trade in 30 Days Challenge, and you can join us right there. And so I am a coach in that challenge every month. A few other coaches at TRADEway also going to be involved on those Facebook pages every day. That's a private group just for you guys. That is an excellent way. It is a low cost. I'm telling you what, guys, think about what you can do with solid actionable financial information, even what we just talked about on this broadcast. If you understood more confidently how to put those things in place, what could that save you? What's the potential earning power of that for you? Okay, we're talking a challenge. This challenge is less than $100 to be in. It's 30 days long, less than $100, and you could save who knows what and feel peaceful about what's happening with your money. That's an investment, I promise you, is absolutely worth making. That is the Trade in 30 Days Challenge. This has been Blair Nightingale for the Market Mondays. And so we are here every single week. Glad to have you guys again on this. We are going to be here next week doing the same thing. And as I mentioned earlier, Wisdom Wednesdays, same time, same channel on Wednesday. So I will see you then. If you've got any questions, concerns, comments, disagreements, I welcome it. I value it. I hope to see it in the comments and have a chat with you individually. I do check those. So go ahead, throw those in there if you joined us today live, if you're joining us on the recording, and I will see you guys next time.